Hello everybody, I'm John, this is JP Strategic Investments, and today we're looking at a very bearish indicator on all of the major indices. And what we're seeing is a divergence between the stock price and the volume of trading. And so what I have right in front of me, let me just kind of show you what I'm seeing and kind of explain what's going on here and what it all means. What I have in front of me here is the chart for SPY, the ETF that tracks the S&P 500, right? And what I want to draw your attention to is kind of the last couple of weeks that we've seen here. Obviously, the market's been on fire, right? And we're seeing a very upward trend here. The problem is that when it comes to volume, we're seeing a downward trend. That is not a good thing in general for the market. The reason this is a bearish sign is because generally when you see a large increase in a stock price, but it's not accompanied by heavy volume or the volume even decreases, that's a good sign that that upward movement may not hold very long, and we could see a reversal back down to where kind of that upward movement started. And it could also be an indication that maybe the bid-ask spread was a little too high and investors and traders are paying up a little too much as the stock price moves up quickly. Kind of a little bit of FOMO going on, right? And we do get some confirmation of that as well with a little bit of an uptick, actually a pretty good uptick in the RSI and the MFI, right? Kind of creeping towards getting overbought. So we're not quite there yet, but this, even without being overbought, is really not a good sign for the market. And we're seeing actually the same thing if we look at, let's go to QQQ. This would be the ETF that tracks the S&P, or sorry, the NASDAQ, right? We're seeing the same thing, right? If we go to and draw this line here, we got this upward movement, right? But the volume is decreasing. Maybe not quite as dramatic as the S&P, but pretty close, right? And you can see as well, we're also seeing an uptick in the RSI and the MFI, getting close again to being overbought. And again, the same thing on the Dow, seeing this divergence here, right? Now, this doesn't necessarily mean for all stocks this is going to happen, right? If you look at, for example, Tesla stock, you can see for most of this upward move, right, we got an increase in volume as well, right? We can see from here up, we also have a steady increase in volume. You can see this orange line, if you guys can see that, it's kind of faint. That is the average volume over, I think, the last 20 days or so. What this is showing here is the volume actually increased above that average as the stock price moved up, which is a good thing. Obviously, we have a little bit of a taper off the last couple of days, but really the stock hasn't moved up that much over the last couple of days as well. So with individual stocks, not necessarily a bad sign here, but again, a lot of individual stocks tend to follow the market, especially stocks that are a large part of the market like Tesla, Apple, Google, and whatnot, right? So just wanted to show you guys this really is, not a good look for the market here, seeing this divergence, seeing it on a pretty significant level here. Now, again, it's just a technical indicator. Obviously, fundamentals could come in, totally change this, and we could see the market go higher. But right now, what we're looking at here is this divergence, especially when we're approaching resistance levels, right? To see this divergence starting to develop here is not a great indicator from a technical perspective. So I just wanted to make this video, kind of show you guys what I'm seeing, what's going on. Let me know in the comments below what you guys think of this analysis, if you guys are seeing anything else going on in the market. If you found this helpful, definitely hit that like button. Other than that, I will see you guys next time and have a great day.